work very similar to your dealer bids and offers, because these are genuine dealer bids and offers, these prices. These are dealer bids and offers from the options markets, right? So if these are dealers bids and offers from the options markets, we're asking the question, are they selling it and sticking it, or are they selling it to hedge? What are they doing? So for example, if we look at the NASDAQ, drag us across a little bit so that I don't lose it when I scroll out just a touch here. Take a look at the top line on the NASDAQ. What price was it at? 16.1. Now, that's obviously a big price regardless of anybody else telling us that there's of interest at this price, isn't it? That's something you're going to look at and say, well, everybody's going to have 16.1. You're absolutely right. Everybody should have 16.1. But look at that price level. That's crazy. On the other side of the dealer key, we can see that if it comes off 16.1, the downside price is going to be 16.42. 16.42, right? So we've got a downside target price area of 16.42 and 16.10. So obviously we can start watching 16.42 and 16.10, can't we? We can start considering what's going to happen at 42s as well. So we start watching that price area as part of that bid offer spread. So when we start thinking about this as a bid offer spread, we start thinking about the shape of the markets in these areas. We start thinking about how the market's evolved when it trades into these areas. We think about how big the stack is. We think about how big the market narrative is. And look at this sell trade into a buy trade at 42s here. Look at that. Now, it doesn't stick 42s. It goes through it. But it comes straight back above it at 42 here at 8:30 this morning. And it goes all the way up to the dealer key at 16,100. That's a 60-point move. 60 points, $1,200 profit on the swing up. 1,200. And as obviously it swings back down again, that's another 1,200. And obviously the idea here is we're trying to figure out what they're going to do with these dealer keys, because obviously if they go offered at the next dealer key, the next bid is going to be at 16.10, isn't it? So we're aware of the next bid price at 16.10. We pay attention. And then we see this massive increase in activity. We say, well, wait a minute. This isn't too far off the 16.40 level. So that big increase in activity could be dealer buying coming in. That big sell trade here that simply is all activity. Well, if they buy that, that could be the dealer. So we've, instead of being a fixed price of 42s, we might then say, well, the dealer looks like they're buying 37s. It's in the vicinity. And obviously, we can see what happens next and so on and so on. We can figure out whether we agree with it, disagree with it, doesn't make any difference. But when the price slows down into the retest, you're getting a lot more confidence on the slowdown that was genuine dealer buying coming in. And obviously, if you picked up the 42s there back up to the 50s, it doesn't sound like much. Still $200 of buy-side business coming in, right? So this becomes your dealer price buyer here. Just because we have a price of 16.42 doesn't mean that they have to buy at 16.42 or sell at 16.42. They use this area to try and figure out what they want to do. They might take the price below 40 to see if any selling comes in, how much selling comes in. And then they might make a decision, just like you would if you were a market maker in those areas. As far as the S&P is concerned, of course, dealer keys are also very important. What was the dealer key for the S&P? Well, the top side dealer key was a price of 77. So let's take a look. So the dealer key we had was 77. The buy side dealer key was 64. So 77 to 64. There's the two dealer keys that are in play today. 77, 64. So let's take a look at the S&P and see what happens at 77. See what happens at 77? A lot of buyers. And then we see the market maker going sell side on the book here. Big style. Big style, right? 77, sell side, big style. And remember, the market maker bid was 64. What happened at 64? Well, we can see that we tested 64 several times here at the bottom edge. If we carry on out a little bit, you'll see that we were below 64 from the overnight session. So today's market, you can see that every time we went below 64, you can see that the dealer was obviously accumulating. See how that big volume node below 64? That big volume node on the today's profile, well, that was obviously all dealer buying in that area, wasn't it? Well, hindsight, we don't know that at the time, but hindsight, that's what it looks like. And with the exhaustion running into that, you'd have been very, very interested in buying that 8 o'clock, 9 o'clock buy trade there from 84s, which is 64s, which actually traded 60s, back to the top side of 77s for 13 points, $650. It's not that big a surprise, is it? Not that big a surprise. So when you see that the 64 price, the big dealer key at 64, is a low volume node, and then you see the big dealer key at 77 is also a low volume node, what does low volume mean? Low volume means a rejection of something, doesn't it? Low volume means a rejection of something. So what we've got to try and do is, if we know that these dealer keys are going to be low volume nodes, we've got to try and figure out whether they're going to reject it by reverting back up or down to the mean, or whether they're going to accept below and then drive. Because we know that's the rejection price. Effectively, it almost acts like a buy side, sell side, but that's not strictly true. Because what happens to the dealers when the price comes into this area is they've got to make a decision about whether to go short to hedge or whether to buy to rotate. It's not a single price, but they've still got to make a decision at 64. They've still got to make a decision in and around these areas. And obviously, if we can get ahead of that decision, that's when we can make the big money on this trade. We can make the big play based on what we think the big deal is going to be on the dealer side. And obviously, we can then relay that into our other charts, into our other narratives. We can figure this out from that point. So you see, this has been brilliant. It's been fabulous. It's been outstandingly good. And yeah, not much as we can say better. But you can see what's happened now that we traded back to that dealer buy trade. You see what happened there? Did we give you that buy trade before the price touched into that price level there? Yes, we did. What happened when it touched back into that price level? It was obviously an exhaustion print. The dealers have obviously just bought it back straight back into that trade, and another 12-point rotation there. So another $240 if you've got the guts to go ahead and take some trades to make that easy decision to pop that back up to the top line again. Very nice indeed. Looking at bonds here,